In this video, I will try the impossible. I will try to make a differentiated analysis on Bitcoin. No attention-grabbing headline, no clickbait, no, there will be a crash tomorrow, nothing like this. We try to look at things the way they are. When we look at the data as if we were outsiders, as if we were not invested at all, we sometimes might be bullish, we sometimes might be bearish. Very long term, of course, Bitcoin is bullish. Short term, things aren't necessarily that clear. Have a look at the price performance of Bitcoin since the previous cycle lows. So we've got the one that started in 2015, that's in blue, and we've got the one that started in 2018, that's in green. The current cycle is in black. We have appreciated at very similar rates to prior cycles, and currently we are slightly below what happened in the past. However, the average market participant is already in quite a lot of unrealized profit. Now, why does this matter? In the end, it's very hard to value Bitcoin, right? What is Bitcoin's worth? Is it $10,000? Is it $100,000? Is it $1 million? Nobody knows. But we all know for what price we bought Bitcoin. But when we are currently in the red, we might just wait it out. We just might wait until we have a new high. If we are currently in the green, we might consider sometimes taking that profit. So the mean is this black line over here. Whenever the orange area is below the black line, it means people tend to be in unrealized losses. Whenever it's above, they tend to be in unrealized profit. And so it makes sense to buy when people on average are in losses. And it makes sense to potentially sell when they are in profit. We oscillate between profit and loss regularly. And currently we are 2 sigma above the mean. Now that's a mathematical term, right? We just look at how much does a certain value fluctuate, and if it fluctuates by 1 standard deviation, it's 1 sigma. If it fluctuates by 2 standard deviations, so 2 times more than the average fluctuation, then that's 2 times sigma. And it doesn't happen too often, right? And it tends to be a good time to potentially sell. And we've just entered that threshold again. There's another chart that I've shown time and time again on this channel. I've talked about the 111, 112K resistance regularly over here. And the big question is, can we actually cross that resistance? Now, there's nothing scientific about this. It's just a curved line. And for whatever reason, in prior bull markets, we always topped out exactly at that line. It seems like somebody is playing games with us. Why are we always getting that close to that single line? But the issue is that currently, yet again, we are very close to this all-time resistance line. And as long as we can't cross that 111, 112K threshold, we've got a hard time continuing this bull market. Historically, the line has just been very well respected. Now, I'm trying to make this video as objective as possible. So we're starting out with the potential negatives. Afterwards, we're going to zoom out a bit further to see where we're going long term. Now, here's an interesting fact. Whenever the price of Bitcoin tends to be elevated, we also see a lot of transactions to the centralized exchanges. So this graph is measuring how many of Bitcoin's transactions go directly to the centralized exchanges, or it's the exchange volume dominance. On this chart, it goes from 0% all the way to 40%. And whenever Bitcoin's price is close to at least a local top, this is elevated. Whenever we are close to a local bottom, this is rather at lower levels. And currently we are again at high levels, a lot of exchange volume dominance, which is not good. When we look at those transactions to and from the exchanges, we can also see what kind of wallets send their Bitcoin to those places. Are those people that are taking profit, or are those people that are realizing losses? When it's mainly loss realization, it's potentially a good time to buy, right? So the Bitcoin price is here in gray. And when the red line is above the green line, it makes sense to buy. Whenever, on the other hand, a lot of people are realizing gains and not so many losses, it might make sense to potentially sell. And the more delta there is, the more profit taking happens. And again, currently, the difference is pretty large. People are taking chips off the table. People tend to sell, or people move their Bitcoin to centralized exchanges when they bought it for lower prices. We can also look at that ratio, right? So the profit realization versus loss realization whenever there's a transfer to the centralized exchanges. And that ratio is this line in black. And this is now a very long-term chart. It starts in 2012. And again, it's high when the Bitcoin price is high. It's low when the Bitcoin price is low. We oscillate, so we should rather buy on a lower scale. We should rather sell on the higher scale. And currently we are high. There's also a ton of leverage in the market through the perpetual futures. The futures open interest has grown faster than the Bitcoin price. The Bitcoin price was at around 70k over here. Now it's above 100k. So growth of roughly 50%. But the open interest, so the leverage on the price, it moved from 35 billion to close to 60 billion. So almost double as much. It's not yet at the heights that we saw when Bitcoin was at 72k, but still, it's comparatively high. It grew faster than the Bitcoin price over the last 1.5 years. And a lot of leverage in a market is of course a problem because sometimes markets lever up, sometimes they de-lever. When they are de-levering, when leverage exits the market, the price tends to go down. One more potential pessimistic data point before we go into the long-term bull. This here is the market value to realized value deviation pricing bands. Now the market value or realized price is just a measure for what did Bitcoin on average get bought and sold for. So that's the average over entire Bitcoin's history. The current price is just the recent transaction. But if you want to look at all of the holders of Bitcoin, we can see if they're currently in profit or in losses based on the recent transactions. And so deviation price bands simply looks at the sigma or the standard deviation away from the mean. And currently we are rather at the upper band. So people are on average quite a bit in profit. And of course, as per tendency, we want to buy whenever we are low on those deviation bands. So to sum up the negative, to sum up all of those short-term measures, it seems like at least in the near future, we might see a bit more of a reduction. I don't have a crystal ball either, right? But the market seems to be somewhat heated. Very long term though, if we've got a time horizon of maybe 1 or 2 years, things are still okay. For example, have a look at this. This is the stablecoin market cap. So how much money is flowing from the fiat system into the stablecoin system and from the stablecoin system into the fiat system. When this is going down, people are redeeming their money for traditional fiat. So the custodians of Tether and of USDC, they have to pay out fiat currency to bank accounts. When this is going up, the exact opposite is happening. People are depositing their hard-earned fiat, maybe through a centralized exchange, to then be held by the custodians. The custodians then issue the stablecoins. So when this is going up, money is flowing from traditional fiat into the crypto world. And that should mean long-term rising prices. Now, how quickly is this going up? Since beginning of the year, the stablecoin market cap has grown by 17%. Now we have passed 5 months this year so far, so we can at least double this number to an annual growth of 34-35%. That's how much we can expect Bitcoin or crypto in general to go up during an expansionary period that started, by the way, in October of 2023. Again, when we zoom out a little bit and we're not so hyper focused on what's going to happen the next week or the next month, overall, there is accumulation by traditional finance, by Wall Street. There are inflows into the Bitcoin ETF. Pretty much every day we see more money getting scooped up through the ETFs. And so this is the ETF balance. On the left side measured in Bitcoin, on the right side measured as a percent of Bitcoin's overall supply. So since the beginning of 2024 to today, so over the span of 1.5 years, we saw 3% of Bitcoin supply getting scooped up through the ETFs. This is a long-term rising chart. We can expect this to continue to go up like this. If we do, then we should expect roughly 2% of Bitcoin supply getting bought up by Wall Street every year. Now, why is that so positive? It's positive because Bitcoin mining is only 0.8% per year. So that means Bitcoin becomes more and more rare over time. It's harder and harder to get Bitcoin. There's another extremely positive effect. Bitcoin also gets lost over time. So over the last 5 years, we saw roughly 10% of Bitcoin supply not moving anymore. Now, if all of that Bitcoin is lost, it's hard to say, but on average, this chart also is going up. So 2% gets bought by the ETF every year, 2% gets lost every year, 4% is how much the liquid supply shrinks every year predictably. And at the same time, the supply expands by less than 1%. So again, very long-term things are definitely in our favor, especially given that US money supply tends to increase constantly over time. This is a growth rate of 6.8% historically. So we should assume that pretty much any asset that holds its value should at least go up by 6.8% per annum. But then, of course, because Bitcoin's liquid supply shrinks over time, we see more and more adoption. The return, the long-term return of Bitcoin should be much more than that. So if you're okay with the volatility, if you're okay to sometimes see those 75% drops, the next bear market is probably going to be less than that. If you're okay because your over allocation to Bitcoin isn't that large, or because you've got a very long-term time horizon to hold it over the next 5 to 10 years, then by all means, just continue buying. Very short term though, the big question is, can we break the 111, 112K mark? If we cannot, we're likely going to go further down. If we can, potentially we go to 130, 140K based on the stablecoin dominance. So I've shown this before. This is how much all of crypto is in stablecoins, relatively speaking, in percent. In the last 1.5 years, we traded in a range. And if this is going further down, so if the stablecoins get deployed more, we're likely going to see a rally very similar to what we saw in November of last year. That would mean a rally like this, and it would thus bring us to the 130, 140K region. So here's November, and we just overlay this to today. And that's then what we get as a potential price target. But again, the big question is, can we cross this pesky resistance over here? The historical resistance where the market tended to get spooked very quickly and where we've also bounced off in the last days. Now, after so many years in crypto, I think there's only two strategies to make money in this market. It's either trying to find altcoins very early, potentially using wallet tracking, buying things before the masses do. And while this is a strategy that can work, it's also comparatively risky. Things like Virtual Protocol or SPX 6900 went up massively this year. But if instead you bought Optimism or IMX or Polygon, you wouldn't have had such a nice time. Now with small bets, a few $100s here and there, the strategy does make sense. But for the vast majority of the portfolio, we have to take less risk. Now, the common narrative is that this less risky bet is simply Bitcoin. And while it's true that there's less risk in Bitcoin than in many altcoins, the price can still go down by 77%. So what can we do? I think the answer lies in taking advantage of crypto's market structure. Most altcoins underperform Bitcoin most of the time. So for example, have a look at this again, right? This is the performance of the top 100 cryptocurrencies in the last year. Again, SPX 6900 outperformed everything else. And here at the bottom, we see Bitcoin. So in the last year, Bitcoin appreciated by almost 72%. Now, how many altcoins outperformed Bitcoin? It's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. Out of 100 altcoins, 17 outperformed Bitcoin and all of the others underperformed. And so with a larger part of the portfolio, we can take advantage of this market structure. So instead of buying Bitcoin, we can buy this here. Now, this is the exact same time frame that we see in those charts. What we see here is again a Bitcoin chart, but it's slightly different. It's not Bitcoin relative to the US dollar. It's Bitcoin relative to Balancer. So what we are seeing here is Bitcoin's relative performance to one of the altcoins, an altcoin that tended to underperform over the long term. Now, why do we see that constant outperformance of Bitcoin over the alts? So it's not just that most altcoins underperform, it's also that the underperformance tends to be rather constant. The reason for this is tokenomics. It's an expanding token supply. Because that's how the venture capitalists and the members of the teams of all those projects make their money. They've got a vesting schedule. They get a token allocation, but they can't sell directly. They have to sell over time, and that depresses the price relative to Bitcoin. Yes, on bullish days, everything is going up. But when we zoom out a little bit, most altcoins are not doing as well as Bitcoin. Now, this is not common knowledge, but we can actually set up a position in a portfolio in a way that we make money when the relative performance of an asset versus another one is going up. So we don't have to bet on the crypto macro. We don't have to bet on Bitcoin going up or down. We can just make money when something outperforms or underperforms. Now, I've made several tutorials on that topic, how to profit from falling prices or gaining from relative valuations, or over here, how to win in bear markets by shorting altcoins. Now, it's not important what the macro is doing if we focus on the relative valuation. Again, the nice thing about the strategy is that it works in any market condition. At the bottom is again Bitcoin. Bitcoin has its massive crashes And the largest retracement that we saw in this chart was maybe 50%, while the gain was much, much larger. So this is an 8,000% gain in relative valuation, while Bitcoin itself only made 100%. And so I'm of course sharing my own trades as well. Check this out. This is where I opened a short position, a relative short position on the Trump token. That was on April 30th. What we see here is Trump relative to Solana. Some community members entered the short as well. And then I closed the position a few days later for a gain of 142%. Now I actually shorted Trump twice, so this was an earlier trade. And again, here are a few other trades that our community members are making. So if we set this up right, if we've got risk management and hedging properly in place, there is real risk-adjusted alpha in positions like this. And so of course I shorted the Trump token again because of the tokenomics. Over time, the Trump supply increases. And it's really important to understand this concept. I believe that risk adjusted, if you want to make large bets, not just a small bets on the altcoins that might do 100x, if you want to bet a lot of money of our portfolio, then we have to bet on something that risk adjusted performs relatively consistently. So this is Trump in US dollars. And if you just bet on Trump going down, then when the market itself is appreciating, you've got a problem, right? Over this time frame, Trump did not go down. However, Solana relative to Trump went up. So that's the exact same time frame. That's a gain of 35%. So it's all about looking at what tends to do worse relative to something else over time. And how to set up those positions is explained in the videos over here. And so feel free to check it out. It's currently 125 US dollars per month. It used to be 165 at the peak of the bull run. Now attention is still relatively low, and so you can lock in the lower rate. I will not increase the rate for anybody that's already subscribed. Only the people that sign up when everything is hyped, they will get the higher price. But if you sign up now, you lock in that price. If it's your first time here, feel free to subscribe. I publish here regularly. A like would be very much appreciated as well. It helps the channel grow. Feel free to also check out Premium. Again, the link should be somewhere over here. You can just click on the link here. It should bring you to the website. And so yeah, see you next time on YouTube or see you in Premium. Cheers.